And the biggest news today in the world of startup, we have the quick commerce player Zepto that has raised $665 million, and this is in the second funding round that they've managed just within a year. Now, obviously, we have seen a participation coming in from a lot of investors here. To talk about the fundraising, what is the plan for the company going forward, we are joined by Aadit Palicha, the co-founder and CEO at Zepto. Aadit, thank you so much for joining in with us on ET Now. And I'm going to start by talking about the fundraising, right? $665 million. One, what is the valuation at which you have raised these funds? And other than that, how will you be using these funds for Zepto? What is the plan here?
So, we were fortunate enough to be able to raise 665 million at a $3.6 billion valuation. And in terms of what we're, planning to use the capital for, look, we're in a position where we've already been able to scale the business from a couple hundred million in sales to now well over $1 billion in sales in just 2.5 years, 0 to $1 billion plus in 2.5 years. And we're continuing to grow pretty rapidly. We're growing 100% plus year on year. And even as we've achieved this growth, we've been able to turn 75% of our markets fully EBITDA and free cash flow positive, and they're actually turning profitable faster and faster. And so from our perspective, we're able to actually reinvest a lot of the profits that we're making from mature dark stores back into the business. And most of that profitability is going to fund the growth investments we're making. The idea for the capital that we have in bank, we just look at it as a balance sheet building exercise going into an IPO, right? The thought process, hopefully, in the near term, is to be a public company, and to pull off what can potentially be a multi-billion-dollar IPO. It's good to have sort of a healthy balance sheet. So our intent is not to really spend this capital; it's to keep it and continue to build the balance sheet. But our mainly the investments we're making are coming from the mature stores and the profitability that they're already generating for us.
Okay, Aadit, also what I want to just talk a bit more is in terms of 3.6 billion is what reports suggest this valuation is going to be post this fundraising. So obviously, it's in 3 years you made such a big growth for the company. 350 dark stores currently, 10 cities is what you are focusing on. What more cities are you looking at, and what is the target for FY25 in terms of the dark stores as well as cities that you have kept for yourself?
Absolutely. So, from our perspective, we are definitely going to be launching new cities. We'll be launching at least 10 new cities over the next 12 months or so. Cities of the likes of Jaipur, Ahmedabad, Chandigarh, and other cities in that zone. So we're definitely going to be expanding into new markets. And, our thought process is to have, today we've got around 350 stores. Our thought process is to hit about 700 stores by March 2025 at the very least. And so that's what we're planning to do. And so yeah, that's the objective.
Right. I just want to understand, now what we've seen as a pickup coming in is tier 2, tier 3 cities. That's where the trend is picking up, right? So in terms of what is the traction that you have witnessed and, any surveys that you have done which excites you to move more towards these tier 2, tier 3 cities? Are you expanding there in the next couple of years? Would we see the bigger expansion for Zepto in these cities?
Absolutely. I mean, that's going to be one of the big focus areas over the next couple of years. We do see those cities as a good opportunity. And when we look at, the reasons why, one, all the indicators of markets that we already have live that have the same household density and income dynamics of a tier 2 or tier 3 city, we've actually seen, pretty surprising trends. These are markets that are actually growing faster for us and are turning profitable faster. And the reason for that is, most of these markets, you don't actually have very strong offline options. The pricing, the quality, and the selection of grocery options, even in the offline world, is not very strong. And so the adoption from a customer perspective, when you give them 10,000 products delivered in 10 minutes that are great quality, the adoption is actually as high, if not slightly higher, than in a metro city like a Mumbai or a Bangalore, when the offline options are pretty good. And so one, you don't have as strong offline options, so you see customer adoption being fairly in line with what you'd see, or if not better than in metro cities. Plus the cost to service these customers, whether it's the cost of rent, whether it's manpower cost, whether it's the line haul cost, whether it's the cost to set up a backend mother hub, all the fixed costs attached to it, all of them are meaningfully cheaper in a tier 2, tier 3 city. And so, even the kind of margin that you need to make from that customer is not necessarily as high, so you can price the product lower. And so that's one of the reasons why we're seeing, or we're seeing so much interest in tier 2, tier 3 markets, and why we're investing so aggressively there.
Aadit, what I was reading also was, I think recently you mentioned in commentaries that, 75% of your dark stores currently are EBITDA positive, is what, if I'm not wrong. So
That's
by,
right.
how much on average time does it take for a dark store to actually turn onto the profitable side? And do you aim at reaching a higher percent anytime soon?
So look, it used to take about 23 months to turn a store profitable. Now it's taking only about 6 months to turn a store profitable. And so there's a lot of execution-led leverage on, variable cost reduction, on advertising revenue growing, on, overall margin mix management, right? With the different categories that we've launched, on CAC reduction, all of which has sort of helped us improve store level profitability. And so, we've been able to successfully take it down from 23 months to around 6 months today. And more importantly, we're in this place where if you look at the um, if you look at the percentage of stores today, it's gone from the last fundraise, we only had 10-20% of stores profitable. Now we've got 75% of our stores profitable, turning profitable faster, and the overall business is close to EBITDA break even. Now, obviously, we're launching some new stores, so that percentage might fluctuate. But given the fact that they're turning profitable so fast, we think we'll still be able to maintain, a couple percentage points around EBITDA and grow the business. And so that's our thinking right now.
Okay, Adit, one other big concern is in terms of what customers highlight is the increasing percent of the platform fee or the increase in the terms of platform fee. Any of the quick commerce or any of the delivery apps that you talk about, there is a chunk that comes in from the platform fee fund. Have you seen any change, since you put in platform fees in place, a like for like change in terms of the volumes, any reduction on that front, or there's nothing of that sort?
So look, I mean, I think we've actually tried our best to keep delivery fees as low as possible. I mean, if you look at the launch of Zepto Pass, we're in a place where today almost 5 million customers across the platform are getting unlimited free delivery above 99 rupees. And that's like one of the core value propositions of Zepto Pass. And so we've given it at a very affordable price also. It's 19 to 39 rupees. And so, our thought process is to try to keep delivery fees as low as possible whenever we can. That being said, obviously we do have things like platform fees, etc. Sort of basic, hygiene fees that exist on the platform. And we've seen, fairly positive results, not a meaningful dip in conversion or retention when we put those out there, especially because, we have things like Zepto Pass to still make the platform attractive for customers.
Now, given that platform fee is in place for you, how is it that overall one you will be seeing in terms of your EBITDA performance? When can we expect the company to be EBITDA positive?
Look, I think one of the reasons why we've been able to pull off this financing is because we've proven the ability to get the business to EBITDA break even. Now, obviously, we're expanding from 350 stores to 700 stores. And, there will be some fluctuation in EBITDA, although the stores are running profitable faster and faster on an individual level. There might be some fluctuation in EBITDA, especially as we're, at the peak of launching these stores. That being said, I don't expect it to be meaningfully far from EBITDA break even. A couple percentage points here or there. But for the foreseeable future, we will be hovering around, a couple percentage points of EBITDA break even. So that's our thinking for now, and that's all that we can comment on. But the only reason why we've been able to pull off this financing is because we've proven to, world-class institutional investors that this company can be at EBITDA break even if it wants to. But we'll be at a couple percentage points here or there as we expand, which I think most folks understand.
So just to reiterate, will it be in the next couple of quarters that that means that EBITDA positive is what we could expect on an overall company level?
Yeah, no, what I was saying is for the next couple of quarters, what I can comment on, we only have visibility over the next like 2 to 3 quarters. We will be a couple percentage points hovering around EBITDA break even. And then post that, we'll see, so definitely before we go public, the idea is to generate not just, EBITDA zero, but to be generating hundreds, if not thousands of crores of EBITDA before we become a public company. So that's the thinking. But for the next 2 to 4 quarters, we'll be within a couple of percentage points of EBITDA, if that answers your question.
Okay. I just want to understand one thing. Normally, in terms of the monthly cash burns, how does that work? Because normally, whenever there's a startup, we do have to talk about cash burns as well. What is the monthly cash burn or the quarterly cash burn? If you could give us any highlight in terms for Zepto?
Look, what I can tell you is that we are, in this place where we've achieved net working capital negativity. So our operating cash flow is actually, has historically been better than our EBITDA burn. And so, if we're talking about a couple percentage points of, on EBITDA, our operating cash flow, at least what we've been able to achieve for this financing is not too far from zero either, even as we've continued to grow the business. And so yeah, but obviously now that we're investing in CapEx and we're going to be investing in new dark stores, you will see that tick up. But like EBITDA, operating cash flow would be in that zone. So, we're talking about, OCF margin similar to EBITDA within a couple of percentage points to break even for the foreseeable future. We won't be at break even, but we'll be within a couple of percentage points away from that.
Okay. Adit, we've seen that increasing trend of those under 30-minute deliveries. A lot of other platforms. Recently, also a couple of months back, we've seen Jio that was planning a quick commerce in terms of under 30 minutes delivery. How are you seeing that competition increasing on the quick commerce front? And do you think that's something that you would be worried about?
Yeah, look, I think from our perspective, we had this we have a philosophy at Zepto that we think that this space is highly execution intensive, right? I think the TAM is clearly very large. We're talking about what will probably be the largest internet outcome in India in quick commerce, given that grocery is bigger than all the other categories that Amazon and Flipkart serve combined times two. It will probably end up being the largest internet TAM that this country has seen to date. That being said, the business is very difficult, very operationally intense. The mechanics are, require sort of a lot of rigor and discipline to perfect. And so the game is all about execution. And so I think from our perspective, our success or failure, and neither will our competitor's success or failure be determined by competition. It'll be purely a function of input execution. So if we're able to execute well, we'll build a successful outcome. If we don't execute well, we won't build a successful outcome. And so the way that we look at it is exactly like that. If three players execute well, there'll be three large companies built in the space. If only two players execute well, then there'll only be two large companies built in the space. And if there's only one player that executes well, then there'll only be one large company built in the space. But it's purely a function of input execution. That's what we focus on.
Okay, and lastly, just in terms of IPO, I have to ask you that. I know you've been bombarded with that question, but what are your IPO plans? When can we expect Zepto to be coming on the D Street? What is the plan there?
So our ambition is definitely to be a large $50 billion public profitable company at some point. That's the stated ambition, and we want to start as a public company relatively soon and continue to build even when we hit public markets. We don't look at an IPO as a climax. We look at it more as a stepping stone, and we're very excited to keep building for the decades to come as a public company as well. I think that most of the highest quality consumer companies globally have been public companies and have accrued most of their value in public markets. And so we definitely want to go public, and we like to go public sooner rather than later. Our ambition is hopefully in 2025, but we'll have to see depending on external circumstances whether it spills over from 2025 or not. But that's the ambition. Obviously, don't hold me accountable to that, but we're going to try to do it as soon as we can.
Absolutely, Aadit. Waiting for it sooner than later, then let's keep an eye on that. But thank you so much, Aadit, for removing time for us and today and talking to us on ET Now. It's a pleasure having you in the show.
Likewise, thank you for having me.
That was Aadit Palicha, the co-founder and CEO at Zepto, joining in with us on the show, talking about the fundraising plans as well as the outlook of the company.